And with that, it's now time we switch gears to yet another very important chat coming your way on cultivating growth, Agri-Fintech, and the future of rural finance. Well, as we all know that agriculture remains a cornerstone of India's economy, yet access to India's to finance remains a challenge for rural communities. And this session right here will focus on how Agri-Fintech solutions are really bridging the financial gaps, empowering farmers, and also driving a sustainable rural economic growth. I would urge all our members to stay back with us because yet it is another important segment. And also people who are joining us may request them to please take the front seats. We have a lot of seats right here. So I would urge everyone to please take the front seats before I invite our speakers on stage. Requesting our members sitting behind, if you can please take and occupy the front seats right here. All right, and it's now time. The stage is all set for yet another chat. Inviting on stage is LVLN Murty, Managing Director and CEO, Dvara, KGFS. Come on, let's bring in some energy and give a round of applause for all our speakers joining us on stage. And to moderate this chat, may I also please invite Mr. Rahul, Mallick, Director of Flamingo BPO Technology Solutions Limited. And he will only step on stage if he hears the applause coming from you all. Come on, let's give a round of applause for our speaker. Warm welcome. And over to you, sir.
Hello? Hello? Okay. Right, thank you. Thank you for having us here. And thank you for the people who are in the audience. So, I think for all of us, the fact is that the next level of growth that is available for the industry overall is in the agri-rural space. The cities are, of course, a place where most current players are playing in the fintech space. But the next level is all coming in the agri-rural space, and that is the white space of the future. And that is what we're here to try and understand. And my background has been in financial services with doing rural, agri, retail banking, and everything. And I'd like to just get Mr. Murty here to just give us a little bit of context of this rural lending because he's a practitioner and has been there in the rural space for many years.
Thank you, sir, and good afternoon, everyone. Yeah, I represent an organization called Dvara KGFS. KGFS stands for Kshetriya Gramin Financial Services. We give loans, working capital loans, income generation loans to people in rural India. This could be for women folk as well as for men folk. Sizes ranging from 50,000 rupees to anywhere around 5 lakh in an unsecured space.
Sure. So I think one of the key things that, I'd like to just upfront discuss because there's a lot of discussion going on around it as well is the challenge of the microfinance business currently. And what are some of the solutions that we can look forward to in this year to kind of improve that space? What has been your experience there and how would you like to tell us about what is happening so that things will improve? I mean, I don't want to get into what has been bad because that is, of course, well documented in all newspapers and everything. But what is happening that will improve that space over the next 2 years?
No, yeah, I am sure everybody is aware that last 9 months, the industry, basically the retail finance sector is going through some bit of stress in terms of delinquencies. And I think this is getting, if you ask me why is it happening, I really do not have any kind of a crystal ball to tell this is the reason, but what contributes to this is the similar way like how in urban India the FMCG or the leisure holidays post-COVID, really the business volumes increased because it was a revenge spending. I think similar kind of stuff has happened that during COVID lockdown, the reverse migration that we were talking about, that people from urban India went back to their respective native places. they wanted to do business because they were not sure as to when would the lockdown be removed. If a lot of people actually started their own entities or small units. The minute economy started coming back, there were some whose businesses flourished, some who didn't, and people started coming. While doing that, the sector also got deregulated in a sense that the regulator actually opened up the sector thinking that all the entities would follow some bit of discipline and they would be under control. But unfortunately, what happened is, other than the pricing cap and really throwing
Lender
money,
cap also. Lender cap also went
lender
up.
cap removed. What we thought is that there would be innovation in terms of product and processes, but unfortunately not much of innovation happened in terms of product and process, but innovation happened in terms of ensuring that we continue to over leverage and give more loan to the customer. I think the customer do not know where to actually invest. I think it is over leverage that has resulted into this.
Yeah, no, I know it's been a unfortunate thing, but I think it's resolving now, right? What is your, from what I'm hearing now from the industry and what we're seeing of some of the numbers, while September was bad, but December is also bad, but it's kind of peaked now, you think, or is there still some way to go?
See, from a lender's perspective, we are only saying, I think it has peaked. But I think it's slowly coming to a level where I don't think it can be worse than this.
Okay.
It is getting cleaned. Obviously, it is also because of the fact that the SRO and most of the lending institutions have put a cap. I'm sure everybody would have heard about guardrails, which the SRO had put for all the lending institutions. So I think some bit of semblance has come in. People have started realizing that there's no point throwing good money over a bad customer. I think this pain would be there for another quarter or two, and then probably things would start stabilizing. It's a cycle which, every 3 years you would realize that, you went overboard, you fell down, then again there would be 2 years of, good harvest kind of a season, and then again you get into a drought period.
So now, in terms of, since this is a fintech summit, in terms of the availability of knowledge, there's so much of tech now that is coming alive. What are some of the technology interventions that are, because otherwise microfinance has been a very manual business overall, right? And it's been, and lending in the agri space overall has been very manual. But the fact is that as we go deeper into that space, because if you look at the banks have operated at a very narrow upper layer of rural and agri lending. But the NBFCs, of course, have gone a little bit deeper, but now they need to go, and they're going deeper. There's a lot of new to credit company. So what is actually some of the technology that is helping to actually penetrate further in your businesses? What are you seeing is helping you actually to be able to go out and do more business?
I think the digital transformation has really helped the industry, just not from acquiring a customer, but also from the institution's perspective. Your entire underwriting processes, your entire disbursement processes or monitoring processes have also got digitized. That today you are able to figure out as to what you are doing, where you are doing, and when are you doing. To the second bit of giving those kind of digital tools from a customer acquiring perspective. So a lot of efforts have gone in, a lot of new tools are getting used, starting from identifying a customer. The entire digital data infrastructure space that got built as part of the Trinity, which is Jandan, Aadhaar and mobile, I think these are really being used in a way that how do you acquire a customer, how do you identify a customer, then how do you process a customer. Okay. While doing that, the entire onboarding processes, which were very manual earlier, I think they have all been digitized. Today there's hardly any paper today that is there. Everything happens on the mobile of a loan officer to the collections.
So is that now happening, you think, across most players in the industry? Everybody is being able to do on digital onboarding on the ground, thanks to people like ID5 who was here earlier and all. Is that something that is now widely prevalent, you think, across?
Yeah, I think most of the institutions have moved to that particular
Excellent
thing. There are some processes because of regulatory aspects that you cannot do. For example, earlier you had Aadhaar based eKYC. Now, obviously, post Supreme Court order, you can't do Aadhaar as a identifier, using a eKYC. But if you are a AUA or a KUA, you could probably use Aadhaar. But starting from getting their CB report to analyzing a CB report, trying to take a bank statement, analyzing the bank statement, geo-fencing the house of the customer to everything is kind of digitized. And I think most of the institutions today have moved towards that.
Very good. So I think, so one of the things, of course, has been the fact that this Jan Trinity that has come has helped us on the ground to basically get, to basically identify the customer better, to be able to lend to them better. And what about the collection side? Is that also now you're seeing, because, one of the things in rural lending is actually when you're out there, you're having to put people out there to collect the money. So that piece, what percentage of your total business is coming now digitally in terms of collections, and how is that improving? What is the penetration improvements there?
I think, see today, from a disbursement point of view, the entire disbursement process is 100% digital. There's no cash that is there.
Okay.
In terms of collection, yes, slowly and steadily the customers are moving towards digital payments. The same fear in urban India that you have is it safe? People are a little bit of scared. You still, especially in rural India, what happens is you work on an assisted model. And while you're in an assisted model, you got to spend time in terms of educating the customer. But today you look at it, almost every household which has got a smartphone would probably have a Paytm or a Google Pay or a WhatsApp. Most of the transactions have become digital. In our case, if you ask me, customer-induced digital transactions on different products vary. If it is a group lending product where the women are the typical customers, they're close to about 38% of our customers are paying digitally.
Wow, that's very good.
And in terms of individual enterprise loans, it's close to about 65% who actually pay digitally.
Okay. So that's very good, because, this is something that has been the holy grail of lending, small ticket lending, is that collections is always a problem, and you have to take costs out of the process so where you can reduce the cost for the customer. What about, so now let me just get to a little bit of, in terms of partnerships, one of the things is that obviously you're not able to, it's not possible for us to operate as just, individually in silos. And so how is it now working across banks and NBFCs and other partners like, IDFI and others? How is that relationship evolving? Have the banks, is it becoming digitally more savvy? Are they able to help you? I believe co-lending has come and co-partnerships have come. Somebody was talking about it. How is that whole ecosystem helping you, and, in terms of helping you build your book in the market?
No, I think this space is actually, whatever transformation that you're seeing in this particular space, and when we are talking about fintech, I think it cannot be with just one institution. I think it is a co-creation, and all the institutions are working together. That's why it's being able to happen. And in the earlier conversation, 2 sessions back, when people were talking about co-lending model, I think both the banks as well as the partnering companies have become, digitally savvy. And today, if you have to reach to this segment where we are operating, if you're not digitally savvy, then the cost of operations actually go up. And if you have to really make money out of, obviously delinquencies are increasing, your net interest margins are falling down, and if you have to make money, then you have to be digitally savvy and you have to move towards digital processes. But in terms of partnerships, I think there is no dearth of, somebody saying that, no, we are not interested in terms of doing that, because this adds to the enterprise valuation either for a bank or for the partners. And everybody wants to be one step ahead of competition. So I think everybody is kind of, digitally savvy, and partnerships.
Co-lending, how has that taken off? Because, there were some views in the middle where the RBI was cautioning some of these banks on co-lending, but they were very keen. Banks were very keen at that time. So in the last 1 year or so, with all these challenges happening, is that sustaining? Is that something that is growing? Are you getting more digitally savvy banks to come in and help with co-lending, or is it just a partnership more where they lend you on your balance sheet basis? How is that working out?
No, I think co-lending as a product is a fantastic product. It actually releases a lot of capital on your balance sheet. If you are NBFC or if you are a partnering company. And from a bank's perspective, what happens is that there is the skin of the partner also into the game, that 20% of that contribution comes in. So obviously, while you are sourcing, while you are doing business, you would be that much very cautious. But it's a great product to have from a bank's perspective and from a distributor perspective. But is it great from a customer's perspective? The earlier co-lending session basically spoke about CLM2 being much more in use than CLM1. And unfortunately in CLM2 what happens is that I as an institution first have to source the customer. After some period I sell it off. Now from a consent management perspective, from being transparency perspective, is the customer aware that I have sold the customer's portfolio to a bank? Now tomorrow what happens is if the bank walks into some other institution asking for a loan, that institution says, no, you are already my lender. The customer is not even aware. So these are some basic operational challenges are there. If those challenges are not taken care of, I don't think co-lending would really fly. From a demand side, I think huge opportunity, but from a supply side, there are a lot of challenges that, if we were a customer, if our CB reports are fired twice, it would impact my score. If I am being reported twice, one for the 20% or whatever is the NBFC or the other partnering company and 80% on the bank, twice getting recorded into the CB brings down my score. So operationally, I think we still need to explore how can we further bring down those issues. The second bit is both of them should come, the convergence should happen across, which is product, process, technology and all that stuff happens, but the mindset. What happens is typically banks have a different kind of a mindset and the partners have got a different kind of a mindset. Who is more agile? I think agility is something which one needs to bring onto the table. And a simple example, one of the leading banks had a process where just before the demand comes in, they send an SMS to the customer saying that your due is on so and so date. But when you're doing a CLM2, the customer doesn't know that who is owning 80% and who is owning 20%. Now, if you send two SMSs to the customer gets lost. And especially in the rural markets where customer is not as evolved as an urban customer, it becomes very difficult. Yeah. So these are some of the operational challenges one need to actually work. The earlier panelist was talking about, doing due diligence. I think when you do due diligence, it is matching of minds, matching of frequencies, and matching of what the customer needs. Unfortunately, what we do is that we come to an understanding in terms of product, process and all that stuff, but we do not understand what the customer needs and how am I able to address the customer needs.
So it actually comes down to product innovation, but also product planning. I mean, how they build, basically how that product is built, and that has to be basically aligned along with these banks. So these banks, what I hear, one of the things is that even NBFCs are actually, some NBFCs who have lower cost of funds are able to actually fund. Is that a better way? Is that an easier way of getting access to co-lending partnerships through some of the larger NBFCs, like say a Tata Finance or somebody like that? Is that something that is easier, or is it still more banks who are doing this? Just to understand.
It's actually both banks as well as bigger NBFCs both are doing. The only advantage is that with bigger banks, at least you have the thing of continuity. Okay. That, whereas larger NBFC, depending on how the book is behaving, there is always a risk that the NBFC might, say that I'm stopping the business. There may be continuity, may not be a continuity and all that stuff. Correct. But I think the other way to look at it is that probably NBFC to NBFC co-lending partnership, they understand each other much better. Their ability to get things changed within their boardrooms would be far more easier than actually going into the bank where the risk and other departments, it's very difficult to change their mindset.
So if somebody is actually here and wanting to actually, looking at this space, the rural lending, and agri-tech lending, because at the end of the day, like I mentioned upfront, this is one of those, the next white space, if you will. Your people like yourself are doing it, but there's a lot of opportunity. There's so many, and the rural economy in India is only growing. The transition that is happening from rural to urban is also an ongoing process. So in your thing, where is the opportunity? Is the opportunity to go right at the bottom? Is that opportunity to analyze the value chain? Where is that next level of opportunity that you think that people should be thinking about, in terms of innovation and things? Where is it required? Because I was talking to somebody outside and they were telling me that, value chain financing is something that is very important. But, the practitioners say that you have to actually go down, like yourself, are doing individual loans and are doing group loans. So where is that next level of opportunity you think over the next 2-3 years that is available?
I think there's no dearth of opportunity. And if today, India wants to be the top 3 economies in the world, India really would have to grow more than 8% per annum till almost next, 10 years. If that needs to happen, across all sectors have to grow. Now, coming to the rural part also, typically India has been agri-driven economy. Now, obviously, the percentage of agri in the GDP was far higher. Now, today services have actually overtaken. But if agri has to really grow, and today morning when Suryodaya Bank presentation was happening there, you saw that across last 20 years, you look at it, agri, KCC, MSME, every line of business have grown. And they're all what? They're all related to whatever is happening from an agri sector. And is there any one institution which says that I have actually degrown? Now, KCC continues to keep growing year after year. Now, I think what needs to happen is that we need to have product innovation. We need to have convergence of various different institutions which are actually coming in. Now, KCC actually lends on a scale of finance basis. Now, is that scale of finance appropriate to the requirement of the customer?
That's the challenge with KCC.
Precisely. So, I'm saying great product. Can co-creation happen between a KCC kind of a product to a working capital loan to a different kind of a product, that you have multiple types of requirements built into one single product? And can we look in terms of a value chain? When you talk about value chain, and if you're talking about agriculture, how do I actually address farm to factory gate? That today there is one single individual who produces from his farm. It moves to probably, if you take a paddy as an example, there's a farmer who sows, produces paddy, cuts, sells it in mandi. Then how do you do Adatya financing? From mandi it goes to a rice mill. How do you basically fund the rice mill? From rice mill it goes to a stockist, that the stockist actually holds. So then you have warehouse financing, and from warehouse financing it then goes to the shelves of supermarkets. That how do you basically make those supermarket guys buy this stuff? I think there is a huge amount of opportunity. We just need to look at different segments, classification. Just like we have socio-economic classification, we would have to do product classification at different levels in the value chain. And how do you stitch various people? There could be banks which could probably look at KCC. There could be a bigger NBFC which could probably look at a different way. There could be NABARDs and SIDBIs who could probably look in terms of refinancing. There could be an NBFC which could probably reach out to the last mile person. I think we need to, if we are talking about value chain, then co-creation has to happen at a different level.
And I think, so this is good. I think, we've been told that we should kind of, try and limit this because we're running very late. But the thing is that, like Murty said, the opportunity here is large. The technology that is now coming available, and we don't even know. I mean, technology is moving at warp speed, right? We don't even know what we can do 2 years from now. We can't even think about it today, what will be possible 2 years from now. But the challenge, and for youngsters and people who want to get into this space, is to say that, the value chain is an important part. Stitching it together, like you mentioned, is important. The products are there. Like he mentioned, there are products, there is KCC, there is co-lending, and all of these are there. But how do you stitch them up more effectively? Those are some of the opportunities that I think are available. And this is a space that, again, I would like to say to everybody, because we've been in it for some time, but this is the next level of growth, where you will see huge amount of innovation, where we need also huge amount of innovation to bring in this whole cohort of, 400-500 million people into financial inclusion. Thank you. Yeah, thank you.
Thank you all.
Well, can we have a louder round of applause? That was indeed a stimulating chat. Thank you so very much, Mr. Mallick, for driving that conversation, and of course, Mr. Murty for sharing such key nuggets of insights with us. With that, may I please invite on stage Mr. Shashank to join us and felicitate both our speakers with a memento, a token of appreciation. Well, some key insights shared on how really Agri-Fintech solutions are indeed bridging the financial gaps, empowering farmers, and also driving sustainable rural economic growth. I would urge you all to please join us together for a group picture. So can we have a group picture, please? Sir, group picture, please. Yeah. Thank you so much.